What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we're still stuck in a trading range and we're going to know within the next week which direction this market is likely going to be heading in. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's SPY was down 0.31%. And last night I did a very detailed episode about the trading range we're currently in, so I'm not going into that same level of detail again. But all you need to know is we are in a trading range between 390 and 400 until we get a breakout. The bullish breakout will be a break above 400 for the gap fill at 408. And then if we break above the gap fill, we're looking for a retest of that strong resistance trend line between 410 and 412. And that is the resistance trend line that defines this bear market. So that will be a very epic battle between the bears and the bulls. Now the bears are trying to defend resistance at 400, break SPY down below the support at 390, and then try to close the gap down there at 381. So you're getting a lot more bearish if we lose that support at 390. Now don't completely rule out the bulls because they do have a bull trend, as you can see with all of the moving averages stacked to the bull side, and they are still above the critical support level at 390. Now the bears do have the advantage of this being a bear market below a negatively sloping 200 simple moving average. So it's going to continue to be a very volatile battle between this trading range until one of the sides is victorious, which is going to be the bull breakout above 400 or the bear breakdown below 390. In the NASDAQ 100 triple Qs, we were down 0.22% and we still have the valid double bottom price target while we are above this neckline at 284, which does take us to a valid upside price target to close the gap at 308. Now we have the trading range between about 282 and 293 with the big bad bear just waiting right there at 293. So the bulls will need to push through that resistance to get up there to the double bottom price target, which is also going to be the negatively sloping 200 simple moving average. As you can tell in the short term, the bulls are building the trend and they are bouncing off of the 50 EMA with today's price action. So don't completely rule out the bulls while the triple Qs are above the neckline breakout at 284. If the bulls fail to hold this support, the bears will very likely push us to fill the gap at 268. So as a bull, continue to set your risk right here at this critical support. And if you're a bear, you need to set your risk at 293 because that's the level to break for the bulls. On the Dow Jones, we were flat on the day, going up 0.01%. And as you can tell, the Dow Jones is starting to lose the support trend line. So this bull trend that was just getting way too far vertical is starting to show some weakness. And we do have the gap to fill to the downside at 331, which is also a retest of the resistance trend line breakout, which the bulls now need to turn into support. The 20 simple moving average is crossing over the 200 simple moving average and coming up to be dynamic support around that gap fill. So the bulls will continue to look strong in the Dow Jones while we are above this critical support zone between 327 and 330. The upside resistance to break is going to be 339 and then just below 342. And if the bulls get that breakout, look for the gap fill at 347. On the Russell 2000 IWM ETF, we were down 0.93% today, so the small caps did get a gap down and close lower for the day, and they now have a gap to fill to the upside at 183.71 and the gap to fill to the downside right around 178. 178 remains a very critical support, and it's also the support trend line, and it will fill the gap to the downside. Below that, we're likely retesting the support at 176, and if we lose all of that support, then we will be looking for a retest of the lows in the low 160s. Upside resistance is going to be this gap fill just below 184 and the 200 simple moving average at 186, which is also going to be the resistance trend line. On the ARKK ETF, we were down 2.08%, and ARKK also did gap down and close below the 20 simple moving average after that rejection from that resistance around $40. This is clearly still a bear market with a gap to fill to the downside at 34. So I would expect to see this gap getting filled as long as we're below this resistance at $40. The next bull breakouts will be the resistance break above 40 to 41, and then we could test the resistance at 43, but this is extremely risk off while we're below all of the moving averages. On the VIX, we were down 0.66% as the VIX continues to close around this level at 24, which means the bulls crushing the VIX any lower will very likely take the VIX down to close that gap at 21. However, this remains a volatile market while the VIX is above 20, so stay cautious. And if we do see the VIX spiking back above 26, that is very likely going to favor the bears to try to push for that next leg lower. On Bitcoin, we're currently up 0.14% as Bitcoin is building this wedge of a triangle in between this level around 16,000 and up to about 17,000. Which means we're very likely going to see another burst of volatility in the very near future. The support is just below 16,000, and if that breaks, look for the next leg lower at 14,395. And if we break above this neckline at 17,560, then we could run back up to retest the resistance level breakdown, which is right there at 19,000. On Amazon, we were down 2.34% as Amazon continues to look bearish with the bear trend, and we do have the gap to fill right around 89.5, so it is very likely that we are going down to fill that gap, especially while we're below 97. Above 97, we could test resistance at 102, and above 102, we'll be looking a lot more bullish for the gap fill at 110. But for the time being, price action is below this resistance at 97 with the bear trend, so it does look like we will be heading lower. On Microsoft, we were flat on the day, going down 0.02%, and intraday we did start to pull back below the moving averages, trying to test that breakout level right around 236, and as you could tell, there were buyers at that level, but we still failed to close above the resistance at 242. So 242 is the critical resistance the bulls in Microsoft need to break, and then that should be enough to bring them all the way back up to 252. And then above 252, it looks like a bull breakout for the gap closes in the 260s. If we lose support around 236, look for the next support around 233, and then below that, the bears will fill the gap around 228. On Nvidia stock, we were down 1.46% as we saw Nvidia just getting way too far extended and due for a pullback, and it's getting the pullback right to the critical support at 156. If this level of support holds, we can start pushing towards 179. But if this support level fails, look for a retest of the support and gap fill zone at 142. On Tesla stock, we were down 2.01% as Tesla is marching straight towards our price target at 173 and is definitely the price target you need to be paying attention to while Tesla is below this resistance at 197. There will be a potential support at the previous daily close at 177, but this really is just starting to look like this was all a dead cat bounce on the way to the price target at 173. Look for that resistance zone at 187, 197, and the resistance trend line at 204. And as long as we're below 200, you need to be expecting the downside price target to come soon. On Apple stock, we're up 1.3% today as Apple did test that strong support zone at 147, and we clearly saw high volume buying at that level and came all the way back up to the resistance zone between 150 and 152. This is nothing to celebrate just yet for the bulls while they are below this resistance trend line at 152. So if you're trying to get bullish on Apple, wait for confirmation of a breakout above 152. At this level, it's great risk reward for the bears, which means we could easily see a spike back down towards the support at 147. And if we lose that support, we'll very likely try to go fill the gap at 138. On the financials, we were down 0.54% as the financials are starting to trend down towards this support at 34.6, and there is still going to be this gap to fill right around 34.3. Overall, we still do have a bull trend. The industrials were down 0.17% today, starting to get that pullback from that resistance around 99, and we do have a gap to fill just a little bit lower around 97. On the healthcare sector, we were down 0.05%, still below the resistance at 134, but overall still in a bull trend. The energy sector was up 0.22%, getting that strong bounce off of the support at 90.5, which is also the rising 20-day simple moving average, and right back above the neckline breakout at 92. So jumping back over to the S&P 500, this is still a trading range between 390 and 400, and there is no way to know if the bears or the bulls are going to be victorious unless you wait for the confirmation in the price action breakout. You could take on more long risk around 390 and more short risk around 400, but once you get confirmation of a breakout in either direction, that is the trade you are going to take for the gap fill to the downside below 390 or the gap fill to the upside above 400. So have a trade plan ready for either scenario and always manage your risk because that is the only way you are going to remain a profitable trader. Also, don't forget to take advantage of the Black Friday special deal off Bank Trade Alerts where you can get 50% off 2 months of Bank S Plus or Bank. All you need to do is apply the coupon code Black Friday at checkout. Bank is absolutely crushing the market, beating all of the indices, including the TQQQs and the SQQQs, which is the only thing Bank trades. So take advantage of this special Black Friday deal now and try out Bank if you haven't already. And keep in mind, this is a limited time offer that will be expiring at the end of November. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.